Hello and welcome to Crypto Weeklies. Today we are going to discuss Chainlink, conduct machine learning based price forecasts, regression analysis, as well as accumulation strategies. None of the content is financial advice. The chart that you are seeing on the screen is the weekly chart on TradingView for Chainlink USD. The key idea with this chart is you can see there are two lines which have diverging colors. The first line is the 200-week moving average for Link. Whenever the price is above this 200-week moving average, the color is blue. As it turns, the price turns lower than the 200-week, it turns orange. Right now it's in orange. That means price at around $11 is lower than 200-week moving average at around $15. The key idea with Link is it's one of the successful cryptos. You can say it's always in top 20 by market cap. You can see over here market cap base rank. It's ranked number 14th. Market cap slightly under 7 billion. Per the tokenomics, you can analyze that about 62% of its total supply is in circulation at 1 billion total supply. And the second moving average is that 300-week moving average coming in close at the current levels at around $11, slightly above $11.40. Price at around $10.98 at this point in time. So these are the two moving averages to specify if the crypto is in accumulation phase or not in accumulation phase. Just a flag whenever this turns into orange. That is the 200-week moving average line turns into orange. That is a key line to watch. Now we'll focus more on the machine learning based strategies and regression based analysis. This is all of the content is that you're seeing on this screen is on cryptoweeklies.com. The link is on the bottom of your screen. All of the content is available to all. You don't have to sign up or pay for anything. So we'll start with the graph, the forecast graph. This exact chart that we had for Link at a average in terms of candles. This is a weekly average in a line chart. This data is fed to the machine learning algorithm, and following are the forecasts output of the algorithm. The base case is the line in pink. The one standard deviation bull case is in yellow. The bear case is in green. Per the model, the base case forecast for Link for the remainder of year is between $11 and about $13.50. The bear case is at between $7.68 and $10.32, and the bull case is between $12.80 and $21.70. So the purpose of these forecasts is not to tell what will happen in the market tomorrow, as in if the market will go up or down. That is determined by the market forces. But as we know that there are only three possibilities: the price will go sideways, go up, or go down. So what are the purpose of these forecasts is to know what are the theoretical ceilings when and if the market were to go up or the token were to go up, and what are the theoretical floors if the token were to go down, and what is the base case scenario, as in without any significant bias to the bullish side or bearish side. That is the base case. So again, if you are interested in tabular version of these forecasts, as in what could happen week by week at a week by week level, this is the tabular info available on the same chart at the bottom of the screen. The key idea with this analysis is the base case is in middle. To its left are the 3 standard deviation bear case, to its right are the 3 standard deviation bull case, and next to the bull case title is the confidence level, that is it at 68%, at 95%, and at 99.7%. the prices would be in this range per the model. So now that we have covered the machine learning based analysis, now we'll go to the regression based analysis. This is the polynomial regression function wrapped around the same chart, which is the weekly price action that we just covered in white color. The base case regression function is this line in pink. On top are the 3 standard deviation bull zones, then on bottom are the 3 standard deviation bear zones. So right now the price is below the 2 standard deviation bottoming scenario. You can see throughout the bear market of 2022, prices have been above the green line. Right now the prices are below the green line. The green line is coming in at around $13, or to be precise $12.80. So if you believe that Link will participate in an upcoming bull run, The likely scenario to the upside is first testing the $13 level, and the 1 standard deviation bottom at around $20, and the fair value at around $32 at this point. And you can see that this in this phase of the market cycle, these bands have an upward bias, whereas in the bear market these bands have a downward bias. This is because per this regression analysis, this is not a logarithmic or linear linear price action based model. This is a non-linear function where again it incorporates a non-linear relationship with time. The price moves in a non-linear fashion, where in the bull phases the prices go up, and in the bear phases the prices go down. The degrees of freedom are at around 4. So you can see you can if you want to know how it is calculated, the details are on the bottom of this analysis. So that now that we have covered that, we have established in terms of regression based analysis as well as on the weekly averages, the prices are at a relatively low levels. If we were to take this information and try to come up with an accumulation strategy, we don't have a financial advice on this channel. So this first model is the simple moving average based model, just to check if the market is ready for a mean reversion trade to the upside or to the downside. Right now the level that is at around 0.33. that means it's the fourth best time to DCA per the model. This is again very short term focused model that is close to identifying the mean reversion, does not the actual bottom. You can see throughout the actual bottoming pattern, the risk levels were between this 0.3 and 0.4, the current risk level, that is. In terms of the market cycle based dollar cost average model, which is calculated on the proportional distance between the regression based fair value and the current price, and that risk is normalized between 0 and 1. Per this model, you can see the risk level for accumulating link is at 0.01. This is the best time to accumulate link per the model. You can see, and historically speaking, whenever we have this risk level that is in plum color, notice this the bottom related risk color, this has been the best time looking back to DCA link. The bottom regression line at this point per this analysis is at around $17. So again, most likely the color would stay at the low risk or in plum color till we reach $17. Again, these things change every single day, and so do our charts. So if you are looking for analytics at a daily level, these charts get updated. All you have to do is check it out on the website, or reach out to us via comments on YouTube. Again, the third model that we have today is the time weighted average price model. This is the longest time or a longer time based accumulation strategy related model. The key idea with this analysis is, whenever the price is below this blue line, which is the time weighted average price for link, or really close to this blue line, that's when DCAing makes most sense. You can see throughout the course of the bear market, this model had identified whenever the price, and this is not some retroactively fitted model, whenever the price was lower than the blue line, that's when the risks were essentially zero. You can see over here, this is the risk overlaid on that. And if you were to go and identify what the current risk level is at around $11, we have left the low risk or zero risk zone at around 0.17. Again, per this model, the second or third best time to DCA per the TWAP. And if you were to do a summary of all these risks, you can see over here we have the 200 week, we have the 100 week over in orange, the 200 week over in red, and the 20 week over in blue. And if you were to normalize the risk based on the three averages, this is the normalized risk. You can get rid of the other lines for better clarity. You can see over in the mania phases, the risks tend to go above 0.5. Again, in March they came really close to 0.5. So if you are looking for any signal, again 0.4 risk is again a key value to look for. Right now the risk per this normalized risk or summary risk is at around 0.13. That means again a significantly low risk environment to DCA link. So per this we can conclude that again and correlate that with the overall risk levels in the market typified by the PeakValley. This is not just link top 100 cryptos related risk. Based on this calculation, you can see several financial or risk indicators go into this dashboard. The summary risk for the entire market is at around 0.18, and you can see the color code is in this green zone. That means it's a low risk environment over here. The best time to DC, again, in the depths of the bear market, when the color code is flashing blue. The last time we were here is in November of 2023. The equal and opposite is the high risk environment, again above 0.4 risk, the orange risk. We left this at April 2022. We haven't been in that high risk environment since the first half of the bear market year. So with this, I'd like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.